Welcome to the Riskwiser Zone. I'm your host, Lewis. We're glad you're joining us today as we dive into the latest developments in the world of technology and its implications on our daily lives. Today, we're going to explore a fascinating story that has been making waves in the tech industry. You might have heard about Sora, the new video generation tool from OpenAI, which is allowing users to create stunning videos with ease. But behind this innovative technology lies a complex web of questions and concerns. From copyright issues to the potential environmental impact of such powerful tools, we're going to break it down for you. The story begins with OpenAI's CEO, Sam Altman, announcing that the company is working on monetizing video generation, but the specifics are still unclear. This raises important questions about how the company plans to balance its business goals with the potential risks associated with this technology. For instance, the environmental impact of generating videos could be significant, and it's essential to consider the emissions burden of such activities. Moreover, Sora is awash with copyrighted and trademarked characters, which has sparked concerns about intellectual property rights. The company has sent letters to copyright holders, notifying them that they'll have to opt out of the platform if they don't want their material included. However, this approach has been met with skepticism, and it's likely that we'll see lawsuits challenging this in the future. Another critical issue is the ease with which users can create deepfakes of deceased celebrities or use cameos of real people without their consent. While OpenAI has introduced some restrictions on how cameos can be used, it remains to be seen how effective these measures will be in preventing misuse. As we explore this story further, it's essential to consider the broader implications of such technology on our society. Will AI-generated videos become so engaging that they'll outcompete real videos for our attention? And what does this mean for our understanding of reality? We'll be discussing these questions and more in the coming segments, but for now, let's take a break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we're going to explore some interesting developments in the market that could have a significant impact on your investments. First off, let's take a look at what's happening in the US markets. The tech sector has been dominating the headlines, with investors eagerly awaiting updates from top IT firms. According to reports, the IT index has seen a 20% year-to-date decline, pushing valuations to 4-year lows. However, some experts believe that currency depreciation could ease margin pressures and lead to a sustainable recovery in IT stocks. Meanwhile, in India, the earnings season is gathering steam, with investors weighing valuation comfort in IT, structural growth in healthcare, and resilience in BFSI. Pankaj Pandey, head of research at ICICIdirect.com, has highlighted some key picks in the healthcare space, including Apollo Hospitals, HCG, and Narayana Hrudayalaya. He's also expressed confidence in both PSU and private banks, citing SBI, Indian Bank, and Bank of India as preferred bets. In the fashion retail segment, momentum appears mixed, with competition intensifying. However, Pandey remains optimistic about growth in the second half, citing lower GST rates as a key tailwind. He's particularly bullish on Arvind Fashions and Trent, believing that lower GST levels will benefit 40% of their portfolio and lead to margin recovery. It's essential to note that these are just expert opinions, and it's crucial to do your own research and consider multiple perspectives before making any investment decisions. As always, we recommend a balanced and diversified approach to risk management, taking into account your individual financial goals and risk tolerance. That's all for this segment of the Riskwiser Zone. We'll continue to monitor these developments and provide you with timely updates and analysis. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we approach the end of another exciting episode, I'd like to take a moment to discuss some of the latest developments in the electric vehicle (EV) market. Now, I know some of our listeners might be thinking, electric vehicles? Isn't that just a niche market? But trust me, folks, this is an industry on the move. As you may have heard, Elon Musk's Tesla recently teased an upcoming event, and investors are abuzz with anticipation. The speculation centers around the possible unveiling of a more affordable EV model, which could be a game-changer for the company. I mean, let's face it, Tesla's been facing some headwinds lately, from declining sales to controversy surrounding Musk's politics. Now, I want to emphasize that we're not here to take sides or get caught up in the hype. As your trusted host on the Riskwiser Zone, my goal is to provide balanced analysis and insights to help you make informed decisions about your investments. So, let's take a closer look at the numbers. Tesla's record third-quarter deliveries were indeed impressive, driven by a surge in EV purchases ahead of the expiration of the $7,500 US EV tax credit on September 30. However, analysts expect annual deliveries to fall for a second straight year, which could have implications for the company's bottom line. The potential introduction of a more affordable EV model is certainly an interesting development. If Tesla can successfully trim costs without sacrificing quality, it could unlock new demand and help the company regain its momentum. As Matt Britzman, senior equity analyst at Hargreaves Lansdowne, noted, the price tag will be the real tell, offering clues on how far Tesla has pushed cost savings and how much new demand it can unlock. Of course, there are also potential risks to consider. The EV market is becoming increasingly competitive, with other manufacturers like Rivian and Lucid Motors entering the fray. Additionally, there are concerns about the long-term sustainability of EV sales, particularly if government incentives begin to dry up. As we wrap up today's episode, I want to encourage our listeners to approach this story, and any investment opportunity for that matter, with a critical eye. Remember to do your research, consider multiple perspectives, and never invest more than you can afford to lose. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.